We're looking at the top 6 copper miners on the ASX over the last month. Their gains are 100% in that period, and some of them 300% to their highs in the last quarter. This is running rings around the large developed copper miners. We look globally, the US, to understand these dominant players, how they're being outperformed by the small microcaps on the ASX with copper exposure. And to understand that, there are 5 driving forces that we need to unpack, and we go straight to the executives of the world's largest copper miners to understand what they're seeing and what the driving forces are. Interestingly, the US and the larger ones are not performing as we'd expect. So, what do we expect? Well, we've got on screen here the wires. That's an ASX ETF that looks at the world copper miners and the world copper market. We get a whole basket of exposure to equities or stocks in that whole copper market, and it shows a huge rally. We're not surprised by that. That's not news. But when you compare it to the futures, you start to question, well, what's happening here? There's a huge exposure of tariffs that are really impacting the market, and we'll unpack the other forces as well in a second. So the driving forces, with the pun of being electric vehicles, yes, we all know that story. But what are the actual numbers, and how does it transpire into the actual copper market and the demand? Well, we've got a multiplier effect from the vehicle side of things. If you're driving an internal combustion engine, petrol, diesel, gasoline, whatever you want to call it, the electric vehicle requires about 3.5 times more copper. So we're talking 23 kilograms in an internal combustion engine through to 83 kilograms for the likes of a Tesla 3, that kind of electric vehicle size. Now, if we look at the megawatts from the power generation side of things, a megawatt of coal or gas being replaced with the green side of things, so a green energy transition, solar panels, wind, that kind of thing. Generally, the renewables require 4 to 6 times more copper, so we're going from 1 tonne to 4 to 6 tonnes for the green energy transition. We're seeing the windmills, the solar panels, that kind of thing. And when you get the windmills going out to sea, that actually requires even more copper because it's got to come back to where we consume the energy back on land. So that's driving into the equation and the demand. Now, Doug Kirwin, a geologist who worked on Rio Tinto's Oyu Tolgoi project, he said, "We will not be able to meet the copper demand necessary for the energy transition and net zero emissions in the next 10 years. This is impossible. Not enough copper deposits have been discovered or developed." We'll get to that in a second because that is a critical key point in it. But we need to round out the infrastructure scale of what we're looking at here. One single 50 megawatt solar facility requires 219 tonnes of copper. Now we're looking to be charging 152 million electric vehicles by 2040, 15 years from now. That requires an additional 978,000 tonnes of copper just for the infrastructure. So there's a huge demand here. How do we address that with the supply? We're going to look at the existing mines in a second. But this is what we're talking about with the huge demand for copper wires and copper for the generation. Now, the market reality, Bloomberg say, they predict that the demand for copper will grow by 53% by 2040. Remember those projects that we just listed. But mine supply will only increase by 16%. That's the key component here, and that's where we start looking at executives to understand sort of why. So we've got the supply issues. We've got impossibility. So mining executives from BHP, Rio Tinto and Western Copper, they explicitly state that current development pipelines cannot meet energy transition demand, with copper discovery rates collapsing completely. So we've got Crux Investor who wrote a great article where they said, "I watched a presentation by BHP yesterday." This really summarises that whole inability to respond to the demand equation. We need to add an escondida every 2 years, we being the world. If you take all the projects and put them together, I don't think you get an escondida. So oversupply is not a problem in copper. This is a global copper market, and we're looking 10, 15, 20 years out. And those time frames are quite critical, because we'll get to that in a second, about the aging giants. Think of the existing mines that we have in the world, the escondidas and the like. Well, can't we just dig more, dig deeper, dig faster, more trucks, more miners, more ports? Let's go. Not happening. Why? Here's the fourth point. The development timeline crisis. An average of 23 years is required from the discovery of a copper site to production. With flagship projects like Resolution Copper, they were stuck in permit restrictions for 26 years, despite containing billion-ton resources and 3 times the global average grades. So one of the best mines that we could take to market, and one of the largest ones, so best quality and one of the largest, was stuck in permits for 26 years. That tells you how slow it can be to bring copper to market, but we're ramping out and rolling out cars, windmills, solar panels faster than ever before, and that's only accelerating. So our ability to dial up the existing aging giants is actually more problematic than just seeing new fields come to market. The world's largest copper mines, so this is excluding Kamoa-Kakula, they are maturing or declining. So Codelco, they suffered the lowest output in 25 years, so that's declining. And Anglo American, well, they're removing the equivalent of an entire large mine from their own supply into the world markets. And I like this quote from Fitzroy Minerals CEO Merrin Johnson. He said, "The largest copper mines in the world, with the exception of Kamoa-Kakula, are all in mature decline. At Escondida, the only thing they talk about at board meetings is how to maintain existing production, how to maintain production. So the existing suppliers are struggling to keep up with what they did last year. They're all sort of declining. So then we add into the supply disruptions that it just happens to any commodity around the world. It just happens. 31st of July this year, 2025, there was a collapse in Chile's El Tinto mine. Now, that typically yields 400,000 to 450,000 tonnes per annum. Tragically, it claimed 6 lives. Shut the mine down completely, understandably. Now, by August 22, 3 weeks later, only half of the El Tinto's 12 divisions had reopened. So that forced Codelco to revise down their 2025 year production forecast. That's less supply once again. So we've got the world's largest mines not being able to supply. That's generally a problem if we're to maintain the same demand. But we know demand's exploding. So what does that mean for supply? What does that mean for prices? That's where we come into the mining companies. But to round out some more opinions on that, Anglo American, they reduced their copper production target by about 200,000 tonnes, essentially removing that equivalent of the large mine. And putting it all together, Goldman Sachs, they say their estimate disruptions could lead to as much as 525,000 metric tonnes lost of copper being supplied into the market. So this is still shrinking supply with an inability to bring back to market. That takes us into the copper miners that we want to see on the ASX and the best performers. Let's jump into these charts because I've just pressed the wrong button, but we'll bring them out. So the top 6, having a look at these gains that we see here. So Broken Hill Mines, looking at 205% gain from the lows to the highs. Solid performer, massive trading chart. So we specifically look at momentum in this channel and we focus on the top 6. We want to be trading momentum. We want the strongest themes. That's what we do here. Broken Hill, you got battery age minerals, so looking at that, 300% gain, huge explosive movement, possibly setting up a high tight flag. We'll look at that in more detail on Friday's videos. Kandahar Resources, okay, that's also 341% rise, and it's still pushing up. Look at that volume on the far right hand side of the chart in the last couple of days. Buyable gap up, 52-week highs, explosive volume, good follow through. Then we've also got BMG Resources, so that movement 323% over the last few months when the copper took a hit. Good steady riser and increasing volume on the right hand side on the up days, not the down days. Bougainville Copper, a name that we know, 403% rise. Again, most recently, huge explosive volume on the right hand side and pushing up $1, $2.50. You get the point here that we have ASX copper miners absolutely shooting the lights out, just as Anthony Albanese is going over to meet with Donald Trump in the White House. And then we also have the treasurer, name escapes me right now, he's over at BHP's 140th year anniversary celebrations, also in the United States. Then we have Challenger Gold. So this is a nice steady riser. Looking at the 10-day, the 20-day averages, just steadily pushing along, 145% gain. So there's some solid gains that we're seeing on the ASX leaders into what we have seen is a very strong 1 to 3 months movement. Now, we're going to have a look at these charts and put them over here so you can have a look at the monthly, the quarterly, and the yearly performances. For those of you who are members, there is a link, and we're going to have the podcast where we go into this in more detail. And if you want to know more about these individual companies, how they fit into the thematic, which one of them has 14.5 million tonnes of resource with only 15% of the system explored, which one has 5.3 million tonnes of copper plus 19 million ounces of gold, and then also ones that have producing operations with expansion potential, then have a look jump into that podcast. But now we're going to look at the S&P 500. We're going to go to these US leaders because this is not a performance that we'd expect from those that are in that copper space and really shooting the lights out. Some are. So Freeport-McMoran, not the best performance. Southern Copper Corporation, now we're seeing a 54% gain. Not that we've seen of the ASX listed companies, the smaller ones that we just listed, but still these give us good proxies for the tailwinds within the industry and fit in with that WIRES ETF that we looked at the very start. Then we also see BHP Group, a name that we know well, and they're having their 140th year anniversary. It's Jim Chalmers who's gone over there, and he's going to be at the celebrations along with Australia's RBA Governor. Then we also see Rio Tinto. We've got a solid gain here, 29-30% over those ranges. A VCP breakout, that's something else that we look at from momentum side of things. What we want to be doing is pushing 52-week highs. Now, Newmont Corporation, if you have gold, if you have copper, if you have silver, you've got tailwinds right now. So they're in a great place, and that is a nice 103% rise over the last few months. Steady rise, barely touching that 20-day moving average. That is a phenomenal momentum chart. Then we also look at Hudbay Minerals. So we're looking at 155% gain here. Again, a solid chart, solid tailwinds. These are the US miners, but when we look at the opportunities within the ASX and those that are copper focused with more projects to possibly bring online in the near future, we understand how that dynamic fits. If you want more of the leading thematics, the top stocks, we've got a whole gold top 6 video over there. You look at those that we've recorded last week of the best gold miners on the ASX.